Right now, the IRS is holding $4,873 that belongs to you. If you don't file one specific form before the deadline, that money disappears permanently. No extension, no appeal, no recovery. Gone. This video is about making sure that doesn't happen to you. Here's what most seniors don't know. The IRS doesn't mail you a check. They don't call you. They don't send your tax preparer a reminder. There's currently over $1 billion in unclaimed refund money sitting in federal accounts right now. Every cent of it belongs to real people who qualified, who earned it, and who simply never filed the form that triggers the payment. The system is entirely reactive. You ask, then you receive. You don't ask, and the money transfers permanently to the U.S. Treasury. After that window closes, you have no legal recourse. And the tax preparation industry, a $14 billion a year business, has no incentive to simplify this for you. The more confusing the process appears, the more seniors pay for help they may not need. My name is Lana Maines. I represent taxpayers directly in front of the Internal Revenue Service. I sit across from the IRS on behalf of real people. The single most painful pattern I see isn't fraud, and it isn't recklessness. It's honest, careful women in their 60s and 70s who qualified for a legitimate refund, whose money was sitting there waiting, and who never filed the form because no one ever told them it existed. That's the most expensive kind of mistake there is because it's invisible. There's no penalty notice. There's no letter. There's just money quietly held in a federal account that never made it back to the person it belonged to. You'll never be told by the IRS that you missed it, and you'll never be told why most tax preparers never mention this to you. The Earned Income Tax Credit has been part of the tax code for decades, but the rules for seniors changed. Recent IRS provision updates created a qualifying pathway specifically for people 60 and older, and the training at large commercial tax preparation chains hasn't kept pace with those changes. This isn't a loophole. It's a documented IRS credit mechanism available under the Internal Revenue Code. The gap between what's available and what gets claimed isn't an eligibility gap. It's a knowledge gap, and that gap is costing seniors real money every single filing season. That leads directly into the two groups who leave this money behind every year, because both have a reason they've already talked themselves out of filing. Group 1 is the existing filer. She files every year. She uses a CPA or a national tax preparation service. She assumes that if something were available to her, her preparer would have caught it. That assumption is costing her money. The Earned Income Tax Credit doesn't apply automatically. It must be specifically triggered on the return. Many preparers complete the return correctly in every other way and simply don't run the EIC eligibility check for a senior filer. The preparer made no error on what they filed. They simply didn't check the box that wasn't in front of them. Group 2 is the non-filer. Her income is low enough that she's below the federal filing threshold. She hasn't filed a return in years because she doesn't legally have to. She assumes that if she owes no tax, there's nothing to file for. That assumption is also wrong. Low income isn't a disqualifier for this credit. In many cases, low income is the exact qualifier. Filing a return, even when you owe nothing, is the mechanism that unlocks the refund. No one finishing this video should walk away believing this doesn't apply to them. Both groups reach the same conclusion through different logic, and both conclusions are incorrect. That brings us directly to the exact numbers, because the figures are the fastest way to prove the point to yourself. The IRS sets maximum credit amounts by filing category. For a single filer with no qualifying children, the maximum credit in the current tax year is $632. For a filer with one qualifying child, it's $4,213. For a filer with 3 or more qualifying children, it's $6,960. The income thresholds for qualification are under $18,591 for a single filer and under $49,084 for married filing jointly. There's also an investment income cap. If your investment income exceeds $11,600 in the tax year, you don't qualify, regardless of your earned income level. That number is specific, so check it against your actual account statements, not your estimate. Here's something seniors miss constantly. Social Security alone doesn't count as earned income for this credit, but it doesn't disqualify you either. If you have any earned income on top of Social Security, even part-time work, babysitting grandchildren for pay, occasional handyman jobs, or selling items online, you may qualify and the calculation must be run. Small amounts of self-employment income open the door. If you're a lower-income senior, the $632 floor for a filer with no qualifying children is the minimum, not the ceiling for your situation. Your actual credit depends on your specific earned income calculation, and for many seniors in the low-income bracket, the number lands significantly above $632. If you're a more comfortable retiree, the $49,084 married threshold means this isn't exclusively a program for seniors in financial hardship. A retired couple receiving pension distributions, modest Social Security, and some interest income may still fall within qualifying range. Run the actual numbers before you self-disqualify. Right now, pause and open your last tax return or your most recent Social Security statement. Not your estimate of your income, but the actual number on the document. Look at the adjusted gross income line, because what comes next depends on where that number lands against $18,591 or $49,084. The first form is Schedule EIC, and it attaches to your standard federal return, Form 1040. You don't file Schedule EIC as a standalone document. It attaches to the 1040 and triggers the IRS eligibility calculation. Both forms are available free at irs.gov. You don't need a third-party service, and you don't need to pay a filing fee to access these documents. The second form most seniors never hear about is Schedule R, the credit for the elderly or disabled. This credit has existed since 1976, and it was designed specifically for seniors on fixed incomes. It's one of the least claimed credits in the entire tax code, not because few seniors qualify, but because most preparers never navigate to it as part of a standard return. If you're 65 or older, Schedule R should be on your return. If it's not there, ask why. The 2025 tax year includes a new senior bonus deduction that reduces your adjusted gross income. That reduction can push seniors who previously calculated out of the Schedule R credit back into qualifying range, particularly in the $20,000 to $35,000 income bracket. If your preparer hasn't mentioned this, ask them directly. Did you run Schedule R with the updated AGI after applying the senior bonus deduction? A preparer current on 2025 tax law will answer that immediately. A preparer who isn't will give you a vague answer or look confused. That answer tells you everything you need to know. There are 3 sections on Schedule EIC where seniors most frequently make errors. The first is the earned income calculation. Earned income for this credit means wages, self-employment income, and certain disability payments. Social Security benefits alone don't count as earned income for EIC purposes. If your only income is Social Security, you don't qualify. If you have any earned income in addition to Social Security, even a small amount from part-time work or self-employment, you may qualify and the calculation must be run correctly. The second common error is leaving the investment income line blank or underreporting it. If your investment income exceeds the cap, the credit is zeroed out entirely. That number must be accurate. The third error is filing status. Your filing status on the 1040 must match your status on Schedule EIC exactly. Mismatches trigger processing delays and, in some cases, automatic disqualification that requires an amended return to correct. If you need filing assistance, 2 free programs serve seniors specifically: VITA, the Volunteer Income Tax Assistance Program, and TCE, Tax Counseling for the Elderly. Both are IRS certified and available at no cost. TCE through AARP Tax Aid specializes specifically in retirement tax questions, pension income, Social Security taxation, Schedule R, and EITC for seniors. It doesn't require AARP membership. Search irs.gov for VITA locations near you or call 800-906-9887 to find the closest TCE site. That's the form. Here's the deadline, and this is where the people who thought they were safe find out they're not. The IRS operates on a strict 3-year look-back window for unclaimed refunds. Once that window closes on a specific tax year, the refund is permanently forfeited. It transfers to the U.S. Treasury. There's no appeals process. There's no exception for seniors. There's no hardship waiver. The window closes and the money is gone. The 2021 tax year deadline falls in April 2025. If you didn't claim the Earned Income Tax Credit or the Schedule R credit on your 2021 return and you qualified, that window is closing right now, not next year. Now, the $4,873 figure cited by IRS data is the average unclaimed amount recovered by seniors in this exact filing window when they filed before the deadline. If you used a paid preparer in 2021 and the credit wasn't claimed, you're entitled to file an amended return on Form 1040-X. Here's the catch that costs everyone. Most seniors assume the preparer's silence means they didn't qualify. That's not what the silence means. Many preparers will file an amended return at no additional charge if the original oversight was theirs. Ask directly. If they decline, the amended return can be filed independently through irs.gov. You can also use the IRS Interactive Tax Assistant tool, available free at irs.gov, to check your eligibility for any prior year in under 5 minutes using your actual income figures. If it shows you qualified for a credit that's not on your return, you have a confirmed missed credit and a clear basis for filing the 1040-X. You'll never be told by the IRS that your window is closing. Here's exactly what to do before the deadline. First, confirm your filing status for tax years 2021, 2022, and 2023. Pull the returns or confirm non-filer status for each year. If you filed, check whether Schedule EIC and Schedule R were attached. If either is missing, an amended return is available. Second, run the IRS EITC Assistant tool. Search irs.gov for EITC Assistant. Enter your information for each tax year in question, and the tool returns a clear eligibility answer in under 5 minutes. Use the actual numbers from your return, not estimates. Third, gather 3 documents before you open the form. You'll need proof of earned income for the tax year, your Social Security statement, and your prior year return if filing an amended return. Fourth, for the 2021 tax year specifically, confirm the exact deadline for your situation at irs.gov under the Unclaimed Refund section. The standard window closes in April 2025. Don't assume you have more time than that. Fifth, submit the completed 1040-X or original return directly through irs.gov or mail it to the IRS address listed for your state on the form instructions. Keep a copy of everything you submit and note the date. The IRS has your money. The forms exist. The deadline is real. The only remaining variable is whether you file before the window closes. Now you know. If someone in your life is over 60 and hasn't heard about this, send them this video today. It may be the one thing that gets their money back before the deadline.